Karpel, I'm CEO and founder of Tradespoon, and today I'd like to go over current market conditions and trade of the week, discuss the current pullback and see where the bottom is, and trade ideas. Disclosures are very important, please read them. If you're new to Tradespoon or this is the first time you see these disclosures, I encourage you to visit the link on your screen to understand the risk associated with trading stock or options. And we do have a workshop on Friday. Please join us at 9:30 a.m. Central, 10:30 a.m. Eastern. All right, let's take a look at the market. Using our model, this is a stock forecast toolbox model, looking at the market, SPY. For the next 10 days, still a strong momentum to the downside, potentially reaching as low as 530, 520 level on S&P. So on one hand, market is extremely overbought. You can see Bitcoin reached 200-day moving average. QQQ spiders pierced below 50-day moving average. QQQ is trading below 50-day moving average. Small caps trading below 15-day moving average, and we haven't had any stabilization, right? So market, before we talked about the bottom, you have to realize that at least for now, we haven't had multiple days where we're not making new lows. So on S&P, main support was 565 going back to July. We broke through that. Been trading below that level for the past couple of days. I think as long as we're trading below 200-day moving average, which is 570, it opens the door for the market. Next level is 540, and then if the 540 doesn't hold, then the next level is 510. So both scenarios are possible. A lot of it depends on macroeconomic data and also expiration, right? We talked about expiration. So I think in the next couple of weeks, market is still vulnerable for further pullback, even though it is oversold. In live trading room, we talked about number of stocks below 50-day moving average. And even though it's down, but it hasn't reached any extreme levels, right? It's still kind of a 2025 low. We could continue going lower, like we had in 23 multiple times, and even 22. So on one hand, it's oversold, and I think any positive news and the market can bounce back. But on the other hand, we are sitting, we broke through the major support levels, and unless there's some kind of a positive news, there's still risk to the downside. So for now, I'm looking at my March position and closing. If the trade is on the option spreads, on the options, if you're down 50% of your option debit, I propose to exit the position. If you want to deploy and maybe roll into, let's say, April, right, then you can consider Broadcom or QQQ going into April, probably at this point, May position. So I'm bullish on Broadcom. I think, again, market is oversold, but probably April or May is where you want to go to find market stability. I still think that we are in a bull market, even though the trend has been broken. I still think that the second half of this year will be bullish. So April, May, I think we will have a rally. But until then, obviously, the risk is to the downside. So those are some of the trade ideas. Continue to hedge, close your March position. I would start at this point, probably May position if you want to be bullish. And bearish, I would stick with April. And finally, we do have a YouTube channel. So tomorrow we have a live trading room broadcast, the morning bell and closing bell. Please join us. Thank you very much and have a great day.